Hello and welcome to Weekend Investing Daily Bytes. We are shooting episode 338. Today is 23rd of January. And we're going to talk about the art of extracting alpha from small caps. A small cap as an index is a tough cookie to break. I'll show you how small cap index has not performed versus other indices over a period of time. But how do you break that and get alpha out of it is something that we will talk about. But today, first and foremost, the reminder that weekend investing loyalty discount program is on. If you are a weekend investor, you'll get loyalty discounts once you complete 1, 2, and 3 years into any subscription. They will be automatically be applied to your account, and you can also plug them in uh, into the resubscription window. But if you have any issues doing this, let us know on email, and we will definitely help you. Broader picture: Nifty remains very range bound. 17,800, this range is still on. We are just 5 days away from the union budget. Markets, post and pre-budget markets, are usually more volatile than what we are seeing this year. Markets probably is not expecting too much out of this budget, but just my own expectation is that if there is no change in the capital gain structure, that itself is a good outcome. Overall, I think the markets have done well in the last year and a half, sticking towards the all-time highs rather than all-time lows like rest of the world. So from that perspective, there is really no reason to complain big. Also, it has been seen that in years where the markets have done reasonably well, or at least have not slumped, the finance ministry does not take a very kind view towards the market. They feel that these people have made some money, and let's now extract our pound of flesh. So I'm just hoping that this budget will not be a pound extracting one, and uh, we may just pass this phase without any event as such. So today's market, IT stocks up on the back of Nasdaq going up on Friday. IT stocks up 1.9%, very handsomely up, now 6.6% up over a month. So good comeback in IT stocks. Pharma also up 0.9%. Auto stocks making a comeback at 0.8. Banking also up 0.7%. FMCG up 0.8%. The only laggards today were commodities, real estate, metals. But one thing that needs to be mentioned here is that today's gains were largely on the back of select large caps and heavyweights. The breadth of the market was still, weak and shallow. If we see the overall broad indices, small cap index actually ended in the red. Mid and small cap index was flat. Nifty next 50 was also nearly flat. CNX 500 managed 0.36% gain. So there was no sort of bullish sentiment across the board. Only the Nifty and the CNX 200 were performing to some extent. In terms of weekend investing strategies, small cap related strategies, MI25, MI50, MI35, all were down, along with NNF10, ATH, MI30. Most strategies were in negative, and in NG5050, India top 10 slight gainers. So no great shakes here. In fact, most strategies not doing as well as their counterpart indices. Ultra Semco was the biggest loser of the day at minus 4.5%. Steel stocks also losing ground at minus 1% on Tata Steel and JSW Steel, results coming in a bit weaker than what people were expecting. Reliance down 0.5%. Levers, a good comeback after the royalty debacle, plus 1.9%. Sun Pharma also up 1.9%. Aisha Motors, it was a good move in some auto stocks. So Mahindra, Tata Motors, Aisha Motors, all, and Bajaj Auto doing all right. Maruti was flat. Adani Enterprise, NTPC, L&T also slightly in the week. But here you can see the big gains were TCS, Infosys, HCL Tech, Wipro, and Tech Mahindra all doing quite well. Banking was mixed. IndusInd Bank flat, uh, ICICI Bank flat despite fantastic results. HDFC and HDFC Bank also gaining some ground. So the art of extracting alpha from small caps. So this is the small cap 100 index, and we've taken the last approximately 20 years of this index. We've gone from 1000 to about 9500. So if you see from a uh, overall 20-year basis, 1000 going to 9500 is just about all right. Nothing earth shattering as such, especially given the fact that in 2008 it went to about 6000. And in the last 15 years from that peak, we are up only 50% or so. Also notable is that from 2008 peak, it took almost 9 years for this peak to get taken out by 2017, and then we had a collapse to nearly 3000, which was half of 2008 peak after 11 years uh, of uh, of this previous peak. And of course, since 2020 March low, we had a fantastic run of almost 4x, and that is what the market is digesting now. It may take more time, but the whole small cap construct is that sharp, volatile moves on both sides, very quick gains, very quick losses, very quick gains, losses, gains, losses. So it will remain like this, I suppose, because that's the nature of the beast. And stocks that do well within the small cap index graduate to mid cap and large caps. There, so on and so forth. So the ones actually who do well don't stay in the index, and hence the index doesn't do so well over a longer period. Uh, so now let's look at the downsides. We had 608% rise here from 2009 to 18. It was more or less a similar sort of a trend with some pause in 11, 12. And then, of course, a rise here of 273%. But the falls have been equally, gigantic. 75% fall in 2008 9, uh, 66% fall in 2018, 2020, and we are currently at about 20% odd fall, although we had fallen more, about 33% in uh, latter part of 22. Still figuring out where we are going next year. Now, you all know what is the problem with drawdowns. The deeper is the drawdown, the more difficult it is to come back out. The analogy I usually give is that you're running on the road and you fall into a ditch. If that ditch is 20 centimeters deep, you'll stand up and start running again. If it is 200 centimeters deep, you'll still have some trouble. But if it is 2000 centimeters deep, that will be a tough one to get out of. So the deeper you go into a drawdown, the more difficult it is to come back. A 60% drawdown means 150% gain to come back to even, and losing the opportunity cost of that time period. So everybody knows now, why drawdowns are problematic. Now, one of our strategies I want to highlight here, MI25, which is our primary small cap strategy since 2016. It has been running live earlier in the universal product segment, pre small case, and then post small case in the last couple of years. So 16, 17, with this bull rally we had here. Um, so what we want to focus on how the index did in that rally, and how the strategy did. So index went up 80% here, from 2016 bottom, and this was after demonetization. So we had a downtrend, and then we made a bottom here near 4200 and went to nearly double, slightly more than double of that rally. So nearly about 80% rise from point to point here. and the small cap MI25 in that period performing 218%. So huge outperformance when the market was in a uptrend. Then came the downtrend. So, about 9,500 top here made down to about nearly 3,000. So 60-70% type of fall here. Uh, so we've calculated from point to point 55.5%. What happens in MI25? It starts to come down along with the market, but then goes to cash. And when it stays mostly in cash, it does not follow the market down. So we are saved to some extent on the downward side. So the strategy has fallen only 28% versus 55% on the index, and hence an outperformance on the downside also. Then what do we get? Then we get a ferocious bull rally uh, in about a year and a half time, maybe little more than that, and we got nearly 200% gain on small cap. Now, when a strategy that is in cash, largely in cash, begins to populate again as the market goes up, it has a lag. So you can see that there is a lagging indicator where the market is running ahead, but it is lagging and then trying to catch up, and then there comes an inflection point where it starts to outperform, but then the market became a bit choppy here in this part of the segment after June, and they pretty much were in line post that. So if you put all this together, and of course in the current this last move that we have, it will make some bottom somewhere. I don't know. Maybe it'll the bottom is already made, or maybe it will make. We will do the analysis of that once it does that and starts to go up. But this is essentially a uh, uh, if you put all of these together, then there is a phenomenal outperformance over the period of April 16 bull run, and then the going to cash, and then another bull run, and then chopping around right now along with the markets here. But over a period of time, it accumulates a lot. So you can see here that it has accumulated humongously. I mean, versus 134% on small cap index, it has made a 506% gain. So the full picture gives you, that over a period of 3, 4, 5, 6 years, once you have witnessed one or two strong bouts of small cap strategy, small cap outperformance, that is when the real picture of how that alpha is getting extracted becomes clear. I mean, if one were to look at just this period, the lull here, or just this period here, then you will not be able to appreciate what these strategies are doing. So this is what I had in mind to explain to you how the alpha can be extracted from this small cap strategy. If you wish, you can subscribe to MI25 on small case. We also have it available on universal basis. So if you are not having a broker who is integrated with small case, you can use the MI25 on universal, and execute it with any broker that you like. So thank you so much for your time. Please do share it with your friends and family, and I hope these learnings are creating some new insights for you. And I'll see you in another video. Bye. Thanks.